Hi, it's Paul Antonelli here. Welcome to the next episode of the Ideal Business Podcast. I was talking to a client yesterday who has implemented the cash flow financial stability program, which relates to allocations. If you haven't seen that or listened to that podcast, please go back and do that. And when we were talking through, I shared with him the next step, which is really sort of understanding how successful your allocation process is. You know, it's really good to implement a process, but it's great to be able to set yourself some targets and know that you're moving towards them or you're achieving those targets. And we do that across all other parts of our business, whether it's marketing, if it relates to leads, if it relates to profitability. One of the things that I think is really important is to encourage effective management of your cash, is to have a way of knowing that you're achieving your cash targets, which is really important. There's a process that I've been using for many years, which is called cash on hand versus bills. I'm going to explain in this episode what that is and why it's important, so that you can better understand how it ties into the allocation process. So what happens with, just quickly recapping on the allocation process, it's all about having a rhythm and a structure for managing your cash, which gives you control of that cash. And that's a weekly process, and it's in detail in a previous episode. Once you've been doing that, with that process, there's one other process that takes place at the same time at the end of the allocation process, and that's cash on hand bills. And I'll just explain what that is. So one of the reasons we go through an allocation process with our cash, we put it into separate bank accounts, which is effectively into separate sort of jars or containers, is so that we have money set aside for the past, the present, and the future, and for developing and improving your business. Makes sense. And so one of the things to do is to then set some targets for each of those jars, if that makes sense. So if we're going to have a jar, and we've all sort of done that in the past. If I want to go on a trip or you want to buy something, you sort of set yourself a savings target, and then when you hit that target, there's a real sense of achievement. And I think our brain works really well like that, seeing step by step by step as a process. So there's two levels in relation to the cash on hand bills. When you do cash on hand bills, it's a fairly tough look at your business, and it really does represent your liquidity, I guess would be the key, the liquidity. Or if you were, probably another way to put it, if you were to turn the business off and say, I've had enough, and close it down, how much cash would you have left? So that would mean that you would, assuming that you wouldn't receive any more cash, so it's unrealistic probably, but let's assume for this process, anyone who owes you money is not going to give you that money, which is often the case when you hear about businesses that don't succeed or fall over. So anyone that owes you money, you're not going to get it. So the only thing that you can count as real is cash in your bank accounts, and that's the cash on hand component, and the bills are anyone that you owe money to. So it's a fairly simple exercise to do. I've been running this process for well over a decade now for all my businesses. We do separate. So one of the important strategies with cash management, if you've got multiple businesses running, is not to mix things up. So I've got a property portfolio. It has its own set of bank accounts, its own allocations, its own cash on hand bills. I've got a management company, it's the same. I've got my franchise business, it's the same. I run exactly the same process, but I keep them totally separate. And that enables me to make sure I I have very high clarity about the viability and the profitability and where each business is sitting without getting it all a bit cloudy by moving money around or taking money from A, paying bills from B, and all that sort of stuff. So I'm just going to explain how the cash on hand bills works. It's fairly straightforward. In the allocation process, talked a little bit about bank accounts. And so what you do is we go through that process and you're actually putting money in these bank accounts. And so your cash on hand is made up of two things. It's made up of the cash that you have in all your bank accounts. So it's pretty straightforward, and you can imagine how, been running this process. You basically come up with a Google sheet or a spreadsheet. And I can share a template with you on that. And you basically have cash on hand, and you list on the left-hand side every bank account or every location where there might be some cash. Okay, so it's fairly straightforward. And because you do the allocation process, if you're doing that process or intend to use that process, typically we do it every Monday morning, then this takes place immediately after the allocation process. So the money's been moved around into different accounts, and then you do this sort of summary. And so you have all the sources of cash. Now, if you're running a business with, might have a couple of different entities, but you consider it as a group, for example, then you might run it as a cash on hand bills for the group. It's up to you how you want to sort of operate that from that basis. If they're just separate businesses for the way that you've structured the business, but in essence it's treated as one business from a profit center, you might run it together. So you have the name of that source. So it'll be bank account names. So for example, with allocations, have the income account, the promotion account, the GST, the tax, all those sorts of, actually name them accordingly to the purpose of that money. The other thing that you include in cash on hand is money that you can access. So it's not, so if you have an overdraft facility and there's 20 grand on it, or you've got the ability to redraw some funds on an account, you also include that. Whilst it's debt, if you utilize it, it is still cash that you can access. So that's part one of it, is the cash on hand. And so you basically have a figure, and you determine, and it's a good thing to do for your business now. For a lot of businesses, because they typically run one or two bank accounts, it's pretty straightforward. But it gives you, as typically for most of my businesses, I'll be running around 8 to 9 bank accounts, and it might be some of them have a couple of different entities, and so I sort of summarise that information up. So that's the cash on hand, fairly straightforward. Now, bills is, as I mentioned before, if you were to turn the business off, anything that you would have to pay, any money that you owe. So that would include GST or VAT or sales tax. Tax isn't something, I don't incorporate tax in that, because unless you've got a tax bill, you would incorporate it, but your tax is sort of determined at a point in time at the end of each year. So I don't incorporate tax in there because it isn't money that's owed at that point in time. But then everything else, like your creditors, if you have credit cards that you use for the business, the balances on those cards, any loans, overdraft balances. So anything that if you were to shut down the business, you'd have to pay. You'd have to, clear out. And so what you end up with is this two figures, effectively. You end up with the cash on hand, and then you end up with the bills. It doesn't, as I mentioned before, it doesn't take into account, it is a snapshot in time. So in our cycle, it's done on a weekly basis, immediately after the allocation process takes place, and it's a snapshot. So it's a snapshot. And it's a really powerful process to do. And so when you do this, you immediately understand, is it where your cash position is? Is it negative? So for example, your cash on hand might be 150 grand and you might owe 250 grand or 300 grand. So then it's negative 150 grand. And so you might determine, part of the process in building your ideal business is to go, actually, I want to have plenty of cash on hand to deal with any unforeseen circumstances or things that might throw us out. So you set yourself a target. And so that's the beauty of this process, is the allocation process is a rhythm. It's a rhythm that I'd really encourage you look closely at and incorporate in your business. It will be a game changer in relation to cash control. And then the cash on hand bills is a second part of it, which enables you to set targets, which is actually a really good thing. So what I've always done is I might set a target 6 months down the track, or for the 12 months down the track, of where I want the balance in every one of those accounts, both the cash on hand and the bills, if that makes sense. And so then I can, and so when you have cash on hand bills, the figure that comes out of that is you simply get the cash on hand and you subtract the bills, and that's your cash on hand bills figure. I've been tracking, that is to me a key statistics for all my businesses, cash on hand versus bills. I track that stat on a weekly basis. I've been doing it for years and years. And so I don't need to contact my accountant, go into Xero, look at books, where are my balances, all that sort of stuff. It's a very simple exercise to do, and it gives you a very sharp and clear focus on cash within your business, which we've already talked about is crucial. And so so where you'd like that to sit, once again, it ties into your risk level and what you're comfortable with. For me, I like to have my cash on hand bills in the positive, and typically the cash on hand bills figure would enable me that there's a surplus which enables me to run my businesses without any revenue for a minimum of 6 months. So that was a target I set myself. It took a while to get there, because there's a lot of activity that takes place in your business, but I had a very clear focus about where I wanted to take the business, how, and to do that, and to make sure I had adequate cash set aside for future development of the business, and to manage any sort of left field activity, example, COVID stuff that's been going on for a year and a half or 2 years across the globe. So basically, it was a really important process. Now, the other advantage of doing something like this is that you're able to, one of the challenges, I guess, as business owners is, when can I take cash out of the business? It's a challenge, no? So you look at it and you've got bank balances, you've got cash sitting around, you've had a good month or a good quarter. Now, can you take cash out? Is it okay just to pull some money out? So what this does for you is enables you to set your own level of where you want these accounts to be and where you want that cash versus bills position to be. And then once you sort of achieve that target, it gives you the ability, or rather than just, I think it's fine, I can rip some cash out. You've actually got a system for determining that you can actually take cash out personally, or move it into another business, or do something else with it, or invest it. So it's a great mechanism for not only giving you a great snapshot of where your business is at from a cash and a bills perspective, but also to help you determine if there's surplus cash that you can actually take out. It's a bit of a reward, isn't it? It's nice to know when you can do that. So depending on your business model, your sort of risk profile, you can determine where you want your cash versus bills position to be. You set yourself a target, and then if you're religiously moving through and in a rhythm of doing allocations, you can see progress towards achieving your cash on hand versus bills objectives and targets. So hopefully this was useful. It's been a very useful tool for me. One of the things that's really powerful about it is as you extract yourself from your business, one of the things that you want to be able to do is have a very good picture of how the financial health of your business is tracking. And you don't want to have to rely on, I'll contact my bookkeeper, I'll get my accountant to do the financials at the end of the month of the quarter. It's sort of a bit late. It just doesn't work. So as some of my business I'm not very involved in, I can get a very quick, this is a key statistic that I look at on a weekly basis. I don't have to talk to anyone. I don't have to go and get reports or request this or P&L or update that, because it's all about cash, and cash is immediate. So it's a really simple process to implement. It has incredible benefits for your own state of mind and for the health of your business, and it enables you to plan forward, give you a good idea of where you're at now, and also know that you're moving towards your cash on hand objectives, which will lead to financial stability and cash flow confidence. So yes, have a good look at that. There's some resources we can share with you. Trust that was useful, and look forward to catching you up in the next episode. Ciao for now.